everyone, welcome to today's session on goods and service tax filings. Today we are going to see what is input tax credit, eligibility and conditions under which GST input tax credit can be claimed. So input tax credit is one of the most important yet the most misunderstood topic under GST. So before proceeding, let us quickly see what we did in our previous session. In our previous session, we learned about the reverse charge mechanism, that is RCM. Under the reverse charge mechanism, the liability to pay GST shifts from the supplier of goods or services to the recipient of the goods or services. Unlike the forward charge mechanism, where the supplier is required to pay the GST on outward supplies, under the reverse charge mechanism, the recipient of such goods or services is required to discharge the GST liability. Say, if a supplier is supplying goods like raw cotton, silk yarn, or provisioning services like goods transport agency services, or any other notified services which falls under the RCM, then in that case, the supplier will raise the invoice. He won't charge any GST in the invoice, and the recipient of goods or services will pay only the taxable value of such goods or services received. Upon the receipt of such goods or services, the recipient will discharge the GST liability and he will claim the input tax credit. So this is how the transaction flows under the reverse charge mechanism. So let us begin with today's topic, that is input tax credit, eligibility and conditions under which the GST input tax credit can be claimed. Under this topic, we will see what is input tax credit and why is it important. Then who can claim it and the legal and procedural conditions under which input tax credit can be claimed. Then we will see the common pitfalls in the provisions of input tax credit and how to optimize input tax credit without facing notices or penalties from the GST department. So let us first understand what is input tax credit. So input tax credit is nothing but setting off the ultimate outward tax liability against the input taxes that you have paid at the time of procurement of goods or services you are trading. So if you see at the slide, in general, the input tax credit or ITC is a process under GST which allows you to reduce the outward tax liability of your business utilizing the taxes paid at the time of procurement of inputs or input services. So suppose if I am a supplier of taxable goods, I am supplying goods and my customers are paying for such goods. They are also paying the GST components on such goods. Then I will collect this GST from the customer and I will pay the GST to the government. At the time of payment of GST, I will utilize the taxes that I have already paid at the time of purchase of such goods. Say if I have paid rupees 2000 at the time of purchase and I have collected rupees 3000 from the customers as GST, then I will have to pay a net of rupees 1000, that is the difference of taxes to be paid on outward liability and taxes that I have already paid on the inputs. So this process of input tax credit initially lowers your overall tax liability, and the system is designed to eliminate the chain formation effect of taxes that we have studied in our previous module that we call cascading effect of taxes, where tax is imposed on tax. And to promote a more systematic tax structure, input tax credit provisions have been introduced in the GST. The main objective behind input tax credit is to reduce the overall tax burden of businesses and promote growth in the economy. So let us take an example. Assume a manufacturer running his own business. He buys the goods for rupees 20,000 and pays 18,000 on it, which amounts to rupees 3,600. Now he is trading the final product for rupees 30,000 and also collects 18% GST on such sales. This amounts to rupees 5,400 rupees. The manufacturer can claim input tax credit of rupees 3,600 that he has paid at the time of procurement against his ultimate outward tax liability, that is 5,400. So the net liability that has to be paid in cash will be rupees 5,400 minus rupees 3,600, that is rupees 1,800. This liability has to be discharged in cash by the manufacturer. So moving ahead, legal provisions. Rule 16, it defines the eligibility criteria and the conditions to avail the input tax credits. Section 17 specifies the apportionment and block credit. Then section 18 deals with specific special circumstances like registrations and composition switch, that is switching from composition or switching into composition scheme, etc. Corresponding rules. Rule 36 states the documentary evidences for input tax credit claims. Then Rule 42 and 43, it specifies the apportionment of input tax credit against the exempt supplies. And Rule 37, it states the reversal rules regarding input tax credit if the payment has not been done within 180 days. So eligibility for ITC. Section 16 subsection 1 governs the principles to avail input tax credit. So to avail input tax credit, the supplier of goods or services must be a registered person, that is, he must be registered under the GST. Then such supplies should be for the purpose of business or in the course of business or for furtherance of business. This implies that such supplies should not be personal in nature. That is, any input tax paid on personal expenses shall not be allowed to be claimed for the business. Then what are the conditions to avail input tax credit? Section 16 subsection 2 governs such conditions. Multiple conditions like possession of valid tax paying document, then goods and services must be received, then taxes must be paid to the government, GST return, that is GSTR 3B, must have been filed. It should not be in the list of block credit, that is the services rendered should not fall under the list of blocked credit under section 17 subsection 5. Then invoice must reflect in GSTR 2B. So let us see each of these in detail. Possesses valid tax paying document. So tax invoice is the primary document on the basis of which input tax credit can be claimed. No input tax credit shall be allowed if a tax invoice has not been issued. Next, goods or services must have been received. Without the receipt of goods or supply of services, input tax credit cannot be claimed. Then taxes must have been paid to the government. The input tax that has to be claimed must have been paid to the government by the supplier of goods or services. Then GSTR 3B filed. The return for the relevant month, that is GSTR 3B, which is a tax payment return, must have been filed by the supplier of goods or services. Then the goods or services that has been supplied should not fall under the list of blocked credit, that is the credits against the supplies that has been notified by the government which cannot be claimed by the taxpayer. Next, invoice reflecting in GSTR 2B. So input tax credit cannot be claimed if the supplier of goods or services against which the input tax credit has to be availed has not been filed in the corresponding GSTR 1 return and hence not reflecting in the recipient's GSTR 2B returns. So these are the conditions under which input tax credits can be availed. So let us see the conditions for claiming input tax credit with the help of a diagram. In this case, Tony TV company sold goods to Gada Electronics, that is Gada Electronics is the recipient of goods. Against such supply, Tony TV company files its GSTR 1 return and it will generate input tax credit for Gada Electronics if the GSTR 1 return is filed within the due date for the relevant month. Correspondingly, Gada Electronics further sold the goods to Babita ji, Mehta ji and Sundarlal ji. Against such supplies, Gada Electronics will raise his invoice and such invoice will contain the GST amount. Upon the fulfillment of such supplies, GADA Electronics will file its GSTR1 return within the due date, that is on the 11th of the succeeding month. So the GSTR1 filed by Tony Company Limited will reflect in the GSTR2B of the GADA Electronics after 14th of the relevant month. Now, while filing GSTR3B return, GADA Electronics will disclose its outward tax liability, which will auto-populate from the GSTR1 return filed by it, and it will reduce the ultimate tax liability with the input tax credits that is reflecting in GSTR2B against the supplies from the Tony TV Company Limited. So the ultimate tax liability of GADA Electronic will be the amount that has been collected from Babita ji, Mehta ji and Sundarlal ji towards GST less the amount which is reflecting in GSTR2B from Tony TV Company Limited. So the balance amount has to be paid in cash by the GADA Electronics. ITC on capital goods. Section 16 subsection 3 deals with the input tax credit on capital goods. So where the registered person has claimed depreciation on the tax component of the capital goods and plant and machinery under the provisions of the Income Tax Act 1961, the input tax credit on the said tax component shall not be allowed. So let us understand this with an example. Suppose I am a registered taxable person and I have purchased a capital goods for my business amounting to rupees 1 lakh. The GST on such capital goods is rupees 18,000, that is at the rate of 18%. So if I capitalize the entire 1,18,000 in my books, then I will not be allowed to claim the credit of 18,000 as input tax credit. Whereas if I wish to claim the input tax credit of rupees 18,000, then I must capitalize rupees 1 lakh towards the capital goods in my books. So if we capitalize the tax component, that is the GST component in our books, then we won't be able to avail the input tax credit on such amount. Or if we want to avail the input tax credit, then we should not capitalize the tax component along with the asset. Time limit to claim input tax credit. Section 16 subsection 4 governs the time limit to claim input tax credit. It states that input tax credit can be claimed on or before 30th November following the year to which such invoice or debit note pertains, or the date of filing of annual return, whichever is earlier. So an invoice dated 1/2/24 and further an additional charge through a debit note dated 3/4/24, then in such a case input tax credit on the original invoice can be claimed up to 30th November 2024 and input tax credit on the debit note amount can be claimed up to 30th 11/2025. The due date of filing of annual return will be 31st December 2024 for the financial year ended 31st March 2024, and it will be 31st December 2025 for the year ended on 31st March 2025. Next we have block credits, section 17 subsection 5. Section 17 subsection 5 deals with block credits and ineligible credits. It defines a list of purchases on which GST is paid but the businesses cannot claim input tax credit on them. Such goods or services includes taxes paid on motor vehicles, there are certain exceptions, then taxes paid on food, beverages and club services, taxes paid on construction related contracts, tax paid on life insurance and health insurance, tax paid on purchase of goods distributed as free samples, gifts, etc., tax paid on inward supply by a composition supplier, and taxes paid on inward supply for personal consumption. In these cases, the GST paid on the purchases or the payment of expenses cannot be claimed as input tax credit. So let us discuss each one by one. So first one is tax paid on motor vehicles. So any input tax credit on purchase of motor vehicles shall not be allowed. Only the input tax credit will be allowed if the buyer of such vehicle is engaged into the business of plying or running them into hire, or is engaged in the business of a driving school, or in the sale or purchase of a motor vehicles. Then tax paid on food, beverages, club services. As the name suggests, input tax credit on purchase of food, beverages, outdoor catering and club services are inadmissible. Then taxes paid on construction related contracts. So construction related contracts are such contracts where the taxpayer is engaged in the business of construction. So any GST registered person cannot claim input tax credit on GST paid on building construction work or job work. Such building could be used either for commercial or residential purposes. However, input tax credit shall be allowed if the builder or the promoter is engaged into the resale of such constructed buildings. Then tax paid on life and health insurance. Any taxes paid on life and health insurance coverages are also not allowed to be included under the input tax credit. Tax paid on purchase of goods distributed as free samples and gifts. Any taxes paid towards free samples distribution or gift distribution or freebies shall not be allowed to be taken. Then tax paid on inward supply of composition supplier. A composition supplier is not required to pay GST and charge GST in the invoice. Hence, he is not allowed to avail the input tax credit against the purchases made by him. Tax paid on inward supply for personal consumption. Any inputs that accrue due to personal expenses shall not be allowed to be taken. Let's move ahead. ITC reversal scenarios. So if the recipient does not make the payment to vendor within 180 days, then he needs to reverse the input tax credit availed on the inward supplies. For example, if I have purchased certain goods from Mr. X on 1st June 2025, but I have not been able to make the payment till 31st December 2025. So the moment 180 days lapses, I am required to reverse the input tax credit that I have claimed on such purchases. Once the input tax credit is reversed, it will still lie in the reclaim statement in my GST portal. So the moment I make the payment to the vendor, that is Mr. X, I can again reclaim the input tax credit reversed by me from the reclaim statement. Also, input tax credit is required to be reversed in case of goods lost, stolen or damaged. Where any registered person who has availed of input tax credit opts to pay tax under the composition scheme, or where the goods or services or both supplied by him becomes wholly exempt, then he shall pay an amount by way of electronic credit ledger utilization or using the electronic cash ledger. The amount shall be equivalent to the credit of input tax in respect of inputs held in the stock and inputs contained in semi-finished or finished goods held in stock. Also, any inputs held in the capital goods as on the date of such opting is required to be reversed. Rule 37 deals with 180-day payment terms. So an important thing to note here is that on the reversal of input tax credit, interest has to be paid from the date of utilization till the date of reversal. Then reconciliation of input tax credit. It is very important to reconcile input tax credit regularly. So match GSTR 2B with the purchase register and keep the books and GSTR 2B reconciled. Reconcile debit notes and credit notes. Debit notes and credit notes also impacts the input tax credit availment. So it is always important to reconcile the debit notes and the credit notes. Use ITC matching tools. There are tools available which can be used to reconcile the books and the GSTR 2B. Next is common mistakes. The common mistakes while claiming of input tax credit, like claiming blocked credits. So blocked credits rules must be adhered to at the time of claiming input tax credits. Then claiming without receipt of goods. So input tax credit should be claimed once the goods has been received or services has been provisioned. So without claiming of goods, input tax credit should never be claimed. Then vendor not filing GSTR1. If the vendor hasn't filed his GSTR1, the input tax credit will not reflect in GSTR2B. Hence, it cannot be claimed, and manually claiming the input tax credit is not correct, as it will lead to issue of demand by the department. Then wrong periodic claim. Again, input tax credit must be claimed in the month in which it appears in the GSTR2B. Then ignoring the reversal rules. Reversal rules must be properly followed, and any ineligible inputs must be reversed. ITC optimization tips. Work with compliant vendors, automate reconciliations, make timely vendor payments, and monthly ITC review. We have already discussed all of these. So to conclude, ITC is a right but with a responsibility. Then follow section 16, 17 and 18 as these deals with input tax credit rules. Match with GSTR2B. Always match your input tax credits and the GSTR2B and keep documentation clean. So that's it for today. Thank you.